from the daily chart. We have old support becoming resistance, those blue lines, and what I've done is we've thrown that resistance area onto the intraday chart. So this resistance looks like around 126.60 in that area, 126.80. Okay, so I threw that onto the intraday, and that resistance zone is just based on the daily, and look at the signals we had on the intraday. Now, in spite of these signals, the first semicircle is a bearish engulfing pattern. The second semicircle is what? An evening star. It's also a bearish engulfing pattern, right? Too. But would we sell short on that? Think about the risk-reward. We're getting lots of bearish candlestick signals at an important resistance. They're important because it's a daily chart. But think about this. If you're selling on that evening star, aren't we selling at support? Right? So I'd wait for a break of the support area. But the point is you had a group of candlestick signals on the intraday chart confirming a support area, a resistance area on the daily chart. It's a really useful, quick. I'm sorry, what's that? No, I wouldn't. The question is, would I buy in that long black candle? I'd sell on a close under the bottom end of that trading range, on that, probably on the long black candle. I would, right. As soon as it broke under that support area, I wouldn't even have to wait for the close. Okay, and these are some potential targets. Once again, because we're using an intraday chart to initiate the trade, we're using the intraday chart to get our targets. These are just prior support areas, essentially. If you trade intraday, you always have to monitor the daily charts. What I would suggest, how many use 2 screens, 2 or 3 screens here? Okay, who doesn't? Okay, you have to have 2 or 3 screens. You have to have different time frames. At a minimum, you have to have a daily chart, and let me show you why, even if you trade intraday. Here we have the change of polarity, old resistance becoming support, and notice how the market stalled at that red line there. The reason the market stalled there, this is an intraday chart, is because the market had very important resistance. Okay, this is 129.70. This is June 5th. Okay. This is June 5th on the daily chart. And obviously, during the session intraday, we don't know what's going to form a shooting star at the end of the day. But why do you think the market stalled there during the day on June 5th? Look at the resistance, a bearish engulfing pattern. Even if there wasn't a bearish engulfing pattern, that's an important resistance area. We always have to be alerted to where supportive resistance is on the daily chart. Now, this is for swing traders, for those who normally don't use intraday charts. You can use intraday candlestick charts to really improve your timing. Quick question, yes?
What time frames do you consider intraday on this daily intraday mix?
Well, I'm sorry, what's the question?
What time frame do you like to look at?
Oh, for intraday, I look at the charts at the end of the day, so I'll look at 30, 60 minutes daily charts, sometimes a 15-minute. But if you have access, if you're looking at intraday charts, if you're an intraday trader, it all depends on your holding period. Okay, if you're in the trade for a couple of hours, I would use a 15-minute, maybe a 30-minute, 5-minute maybe. But I would not suggest using 5 or 15-minute candlestick signals or even 30-minute candlestick signals in and of themselves to buy or sell unless it confirms an important support area. And that, to me, is on the daily chart. Okay. So for swing traders, okay, how do we improve trading or timing with an intraday? Okay, we saw this before, this slide before. I just kind of blew it up. Okay, the red arrow points to a hammer. Okay, when did we get the hammer's confirmation? Remember, for a candlestick signal, we need the open, high, low, and close, right? So for those who use a daily chart, you have to wait for the close of a daily chart. But there's nothing to say that you can't use the close of an intraday chart. So this would not give us a good risk-reward because our entry point is here on the close, or the next day's opening. So this would not be a good risk-reward. Okay. So this price area here is right around 174 on the close. April 3rd, I'm making a magnifying glass. zooming in, this is April 3rd. This is a 60-minute chart. Okay? What's happening on the 60-minute chart? Some long lower shadows, right? Not really enough of a buy signal, no hammers, but nonetheless we're getting some lower shadows. Okay? And that is right around the 172.50 area. Okay. Now let's look at a 30-minute chart. April 3rd, morning star, piercing pattern, okay. Bullish engulfing pattern. So essentially, we had a group, and markets going from lower lows to the same lows. So essentially, we were getting reversal signals right around the 172.70 area. Even if you waited for a close above that little resistance area, you see those 3 or 4 or 5 sessions, you see a little resistance there with the engulfing pattern and all that. Even if you waited for a close, it would have been a little above 174. So essentially, by using the intraday charts, instead of just the daily charts, this is where you would have gotten the buy signal on the daily chart, which means you wouldn't have bought it because it's not a good risk reward. Okay. By using the intraday chart, your intraday buy would have been down there, which is probably at least 100 basis points lower. Now, because you're trading with the daily chart, your target is the daily chart. So what you've done is you've found a hidden support area you would not have seen on this daily chart by going intraday. Let me show you an example again. This is the daily chart. Right. The target is whatever time frame you're using to initiate the trade, that is the time frame you should be used to set your targets. If you're trading with the daily chart, even if you're using an intraday, to get early reversal signals, if you're a daily chart, I would be looking at that. So here, the market closes at what do we have here? Bearish engulfing pattern, right? Now, it closes here on April 6th at 122.29. Is this worth a short? And again, because a price target is subjective, I'll show you what I'd be using. I'd just be using the pivot low there. So essentially, the stop would be there, and the pivot low would be a potential support area. So the risk reward, not very good. Now, let's go to an intraday. Okay, here we have a 60-minute chart. So this is April 6th also. Okay, that black candle was April 6th. So to your right with the light blue shading, that's April 6th. On the 60-minute chart, see the reversal signals we got? The doji. Okay, and even if you wanted a little extra confirmation, okay, you may have waited for the close into the doji there. Okay, be a bearish engulfing pattern. Remember, if a black candle wraps around a doji, it's still a bearish engulfing pattern. So essentially, you would have gotten a sell signal at 123.05, okay, instead of 122.29 on the daily chart. So you would have gotten an earlier sell signal. As I mentioned before, if you're trading on the daily and using the intraday to get an earlier signal, your target normally should be based on the daily chart. But if you happen to be home and you see this and you're trading here, and on the intraday chart you see the markets tending to build some long lower shadows, like on the right side there, some piercing patterns, nothing wrong with taking some profits. Okay, swing traders. Using an intraday chart to see if the market is holding support or resistance. Okay. Here, a daily chart. Now, we have the support area shown by the 2 red lines. On May 17th, that was pretty close. Was that a successful test of the lows made with those red lines? And what we could do is go to an intraday chart to see what kind of signals we got on May 17th to see if indeed that was an important confirmation. So here's May 17th. This is a 60-minute candlestick chart on May 17th. What do we have?